Investing may seem like something complicated that only boomers or big-time Wall Street bankers have success with, but in today's day and age, that's what makes the difference between driving a Toyota Corolla or a Lamborghini Aventador to your high school reunion. In this video, I'm going to be taking you guys through how to invest for teenagers through my personal experience investing starting at 15 years old. Okay, so step one to investing if you're under 18 years old is to get your parents' permission. This may pose a challenge for some people since some parents are risk adverse and may not want their kids to invest. In case you guys are having trouble convincing your parents to even let you start investing, let me show you guys something. It's called the compound interest calculator. If you guys follow one of the strategies I show you in this video, you should have no problem getting an annual return of 8%. And if you guys invest $200 a month from age 15 to age 65, boom, let me click calculate. You're gonna have $1.607 million by retirement. Just so you guys know, if you never invested that money, you'd only have $120,000. The best thing you can do to help compound interest do its magic and make you rich is to start investing early. A lot of you guys may not have a bunch of money to invest right now, but the money you do have to invest will be worth a lot in the future if you invest it. To give you guys another example, if you can save $100,000 by the time you're 25 and then never touch it again until you're 65, boom, you're gonna have a total of $2.4 million by retirement. Showing your parents stuff like that, at least in my experience, will help convince them to let you go down the journey of investing. And now that you have their blessing, let's get into the fun stuff. All the way from buying into regular blue chip stocks to investing into NFTs for the metaverse, there are a lot of different places you can put your money, with some of them definitely being more risky than others. In this video, I thought it would be fun to show you guys how I personally invest my money, starting from most risky and moving to least risky. Starting things off with my NFT investments, which is probably the most risky thing in my portfolio. You guys can see I own a Pixel Doge, and I got another NFT from this project called Secret Whale Society. To be 100% honest with you guys, I bought into these NFT projects kind of as a joke, where I put $1,000 into NFTs, and I'm down quite a bit on my investment right now. The floor price for both of the NFTs I bought into tanked quite a bit, and my $1,000 investment has now turned into 500 bucks. That's definitely an L, but it just goes to show that you can lose a bunch of money in NFTs just as you can make a lot of money. And as much as people like Gary Vee are hyping up the NFT space, it's pretty clear that we're in some sort of bubble right now, and these returns people are seeing on random projects isn't gonna last. That being said, if you guys do see an NFT project you want to invest money into, the key is to go to this exchange called OpenSea.com, and to use this exchange, you're gonna need either a Coinbase or MetaMask wallet to buy NFTs. I personally use Coinbase. As you guys can see, I have a little bit over $11,000 in coins like Bitcoin, Ethereum, and then I have a smaller amount in Cardano and Solana. I don't know if that's how you actually pronounce those last two coins' names. I'm not really a crypto expert, but who knows, maybe my Bitcoin will buy me a yacht in 10 years. If you guys want to open a crypto account under 18 years old, you're going to need to use your parents' information. At this time, both Coinbase or MetaMask don't offer any sort of custodial account, so what you're gonna have to do is go to one of the links in my description. Down there, you'll find a link to either Coinbase or MetaMask, whatever you want to use, and I believe just for signing up on either of those platforms, you get $5 of free Bitcoin, which is a good deal. The last of my quote-unquote risky investments involve the world of day trading, and in case you guys want to see how it works, today for the first time in a very long time, I'm gonna try to make some money with it. It's currently a Sunday when I'm filming this, so unfortunately the regular stock market is closed, but there's another market open known as the Forex market.
My dude in my group chat, bro, my mentor, he made $800 a day, bro.
How much did you make?
But this other bitch in my group chat, she made $400.
Nah, I'm asking how much you made.
Me? I just started, bro, you know what I'm saying?
The online space around Forex is definitely a lot more sketchy than regular day trading, but the only main difference is instead of trading portions of companies, you're trading currency. I don't really know how Forex trading works. I've only tried it a couple times in the past, but luckily my friend Cooper has some knowledge about it, and we're gonna hop on a Zoom call today for him to help me out. All right, everyone, so I'm here with the homie Cooper, who knows all about Forex trading. I've got a camera up there, and then I've got a camera recording the Zoom call, and we're gonna do some trades. The type of Forex we're doing is HFX, correct?
Correct.
To get started with Forex trading, you go to www.forexblue.com and analyze currency strengths.
So this goes from strongest to weakest. So if I'm doing AUD CAD, my AUD is stronger than my Canadian dollar. So I'm going to be looking for a call because it's going to go up.
After looking at that chart, Cooper went to tradingview.com and analyzed with further indicators.
I have these things called indicators that let us predict it more highly. I have this thing right here called the stochastic RSI. It mirrors the market. So you see how this right here went up and then came down like a roller coaster. It did the same thing right here.
After about 15 minutes of explaining, I started to get the hang of how HFX trading works. So it's basically, it comes down to looking at like the currency strength, like figuring out what should happen, and then you check out the RSI. If the currency strength is telling you you're going to do a call option, you look at the RSI if they're both on the bottom, if both lines are on the bottom, and then okay, I got you, dude. Yeah. With that brief lesson out of the way, it was time to get into some day trades. All right, guys, so we're about to get into a trade on AUD CAD. It's got to drop to 120, so we're getting super close. Hopefully we can get in. I'm going in with $15, so like a little bit over 1% risk. Okay, at 122, I'll put $5 on it, and then if it drops to 120, I'll do full. All right, I'm in. I've got 2 positions, total of $20. Come on, we got to get it going. We got to get it up. So guys, unfortunately I ended up taking an L on that trade for a total loss of $20. It's okay though, because we're gonna look for another trade and try to profit. So guys, for this next trade, we're gonna be trading Euro JPY. We need it to drop to 226, right? Okay, hopefully it does. Ooh, I'm in at 223. After taking that trade, we were in the profit zone for quite a while until the chart tanked last second. No, you bitch.
Don't do it like that.
As you guys can clearly tell from that, day trading is one of the most risky ways of, I don't even want to call it investing, because if you do it the way I just did, you're basically gambling. The truth is that 90% of day traders lose money in the long term, and the ones that do end up profitable spend thousands of dollars learning. I don't say that to discourage you guys from getting into day trading, but I am saying if you guys decide to mess around with any risky investments like crypto, NFTs, or day trading, I strongly recommend you also do some traditional investing into stocks or ETFs, which I'm gonna get into next. Taking a look at one of my stock market accounts, you guys can see I have some money invested in a bunch of different individual stocks like Apple, Dave & Buster's, I've got some Disney stock, and finally the majority of my money is pretty safely invested into this ETF called VOO, which is an S&P 500 ETF where you own a fraction of all of the 500 largest US companies. This way of investing is my personal favorite since I'm simply buying into companies I personally believe in, or I'm buying into stocks of companies that I personally use every single day, and I plan to hold all of my investments for a really long time, no matter what happens in the short term. If you guys are looking for an investment platform that essentially automates the process and makes putting your money to work a little bit easier, I'd recommend you check out a platform like Wealthfront. When you click the link below and create an account with Wealthfront, they'll start by asking you some questions, and based on your individual risk tolerance, they'll invest your money into low-cost ETFs and build you your own diversified portfolio. Decades of data show that investing into ETFs where you own fractional shares of a bunch of different companies is better than investing into individual stocks over the long term. In case you guys want to have a little bit more say as to what you're invested in, Wealthfront actually gives you the option to put more money into certain industry sectors like tech, clean energy if you're into that vibe, healthcare, or whatever other industry sector. There's a lot to choose from. The management fee with Wealthfront is also super cheap at only 0.25% of the money in your account annually, but if you guys have less than $5,000 to invest, you can get it managed completely free if you use my link down below in the description or go to invest.wealthfront.com/financialwolf. Be sure to check them out because I want to work more with this company in the future. At the end of the day, guys, if you get started investing young, you're already so far ahead of the curve, and just to prove it to you all, I'm at a college campus right now and we're going to interview a bunch of college students on if they invest. Excuse me, do you invest?
Yeah.
You do? Yeah. What do you invest in?
I'm working right now.
Oh, okay. I don't think he was interested. Excuse me, guys. Do you want to be a part of a video? It's to my mom. It's for my mom. It's like 2 seconds.
Yeah, sure.
Do you guys invest?
No. The global financial system is going to collapse. Put all your money in bread and gold.
Thank you for the advice, sir. Interesting take on the economy right there. After that, I interviewed a bunch more people.
The last time I did that, it was a game in 8th grade, so no.
Did you win? Were you good?
I was so good.
Do you invest?
Yes, I do.
What do you invest in?
Tech stocks and ETFs.
Do you invest in Bitcoin?
I do not invest in Bitcoin.
Do you believe in Bitcoin?
I do believe in Bitcoin.
No.
No?
No.
Okay, do you know anything about like stocks, crypto, anything like that?
Not really.
No.
No.
I definitely seem like the biggest nerd just asking people if they invest. It's like, have you ever heard of NFTs? Do you guys invest?
No. My dad does.
I invest in like index funds, mutual funds, that kind of thing.
Yeah, you got a coffee and pretty nice jacket. You probably made a lot of money off stocks, huh?
Not cashed out, so we'll see how it goes.
No, I don't. But like, if I knew more about it, I would.
All right, guys. So in conclusion, a lot of the people we interviewed are between the ages of like 18 and 22. I'd say like most of them don't invest. So guys, get started investing and you'll be ahead of the curve. One of the biggest reasons a lot of younger people don't get into investing is because they simply don't have a lot of money. Well, guys, luckily you're talking to the Side Hustle King, so if you want to learn about 3 great ways to make money from home, click this video on the screen right here. And with that being said, please be sure to check out the sponsor Wealthfront as well. I'll have them linked at the top of the description. Peace out.